Hi, everybody. My name's Johnny Conran, and I'm managing partner of Joseph Mews. And today we have the pleasure of being joined by Raj Patel, who is the CEO and founder of My Property Host. And I want to start by saying thank you to Raj for joining us, and look forward to hearing your insights into the short-term let market in Manchester. But just to give a bit of background, Raj started My Property Host in 2013 after giving up his career as a partner in a top 100 law firm in London. And it's safe to say they've been a huge success ever since then. And it's a pleasure to work with these guys. And so Raj, thanks for coming on.
Thanks, Johnny. Thanks for having me on the link today. So as you said, I'll give a brief introduction to myself. I was a partner for my sins in a top 100 UK law firm specializing in tax, and decided, as people do, to switch into the property game. I was, in fact, also the first client of the business and continued to be the original client of the business. We focused originally on London, and then realized actually that we wanted to be a business that was across the UK. So as you said, 2013 start, we really started ramping up operations in 2018. Following the pandemic, we're now at just shy of 3,500 rooms across the UK as at the end of last year. And that's across 39 different locations.
39. Wow, that is impressive. And it's great. Obviously, when we do these sort of insights, particularly every month, we want to get an expert in the market, and it's great to have somebody that's obviously has so much insight into what we're doing. And with Joseph Mews, we provide the developments and the insight into investment locations, but being able to have your thoughts and knowledge into the market in specific locations, because as you just said, you're in so many around the country. It's obviously great for our clients and our investors to have your knowledge. So without further ado, I mean, we're going to get onto a few questions with regards to Manchester. Joseph Mews have obviously just launched a development in the centre of Manchester with one of our partners, and we're really excited by it. And I think Manchester is somewhere that's getting a lot of limelight for all the right reasons, from a rental perspective, both long-term lets, short-term lets, as well as the ability for growth. So I think just to start with, Raj, I mean, as an overview of Manchester, how are you seeing that market in comparison to other markets? And what are the main things that are driving the market from a short let perspective?
Good question, Johnny. I mean, Manchester is a fantastic city for both business and leisure. Some cities in the UK, such as Birmingham, more focused on the corporate business. Manchester has both angles. We've had various shifts since COVID. So if the corporate market is going into retreat slightly, the leisure market tends to be up. And so it's a great balancing act. In terms of the short let market in general, it's massively on the increase, and you can understand why. You're basically getting more for less. Short-term rentals, you're getting an entire apartment, even if it's a one bed, and the one beds generally tend to be on a similar price point to a Premier Inn, but you're just getting a whole lot more. You're getting a living room, getting a kitchen, you're getting a bedroom in which you can do more than swing your suitcase in. It's just there's more for less, which is what every consumer's dream is as a guest. And the same thing for a two-bedroom. The saving with a two-bedroom gets even bigger.
Exactly. I mean, we all know how expensive hotels tend to be these days, and there seems to be a lack of them, particularly in city centres like your Birminghams, like your Manchesters. So, I mean, coming on to that, as an investor, I guess the things that you want to understand from the numbers is, what the kind of expected, I guess, from previous data and from knowing the market, what the expected occupancy rates tend to be in a city centre like Manchester, and obviously the average nightly rate. Obviously, you mentioned that they're sort of similar to a Premier Inn. What are those kind of figures that we're looking at today?
Sure. Well, we track to 80% occupancy. That's our so we operate in urban locations. We don't generally tend to operate staycation destinations which are more seasonal. We operate in the urban locations, and the primary reason for that is the fact that it's a pretty steady demand across the year. There is a bit of a shortfall in January, February, and March where it dips, but other than that, the rest of the year is pretty constant. There's minor peaks and troughs, but it's pretty constant. So we tracked 80%. Last year we beat that. We were at 84%. And we will be in that ballpark. In terms of the nightly rates, it really does depend where in Manchester the property is. Typically, we've got within the central ring road, which is central Manchester. We're tracking it. Look, so last year, but 2 bedrooms were at £136 a night at 77% occupancy, and 1 beds were at £96 a night at 83% occupancy. Usually, there'd be a much bigger differential there between 2 beds and 1 beds, but the leisure market was off last year. Slightly odd, you might think, but since no one had been abroad really since 2020. So the summers of 2020 and 2021 were out due to COVID. So the UK staycationers that would have stayed in the UK and gone to places like Manchester fled the UK because it was their first time in 3 years. So we saw a little bit of a dip last year, and there was the Omicron variant towards the beginning of the year, which also hampered bookings massively. So 2 bedrooms were slightly hampered last year. We'd expect that to be up by about 10% this year, and that's where we'd expect it to stabilize.
Amazing. And yeah, I mean, sort of leading on to that, the kind of the pros and cons of 1 beds versus 2 beds. I think you kind of alluded to it earlier. The 2 beds tend to be more value for money, really, when you're comparing to a hotel, I suppose, because 2 double bedrooms, you can get 4 people in there, and the price differential isn't so extreme. Would that be your recommendation from an investment point of view?
Really does depend on the location, Johnny. Some locations, so 1 bedrooms tend to be more for the corporate market. So obviously, if there's a large corporate presence in an area, then that makes sense. We've just opened up in Retford, for example, and there's great demand there for 1 bedrooms. 2 bedrooms have the benefit of attracting a leisure crowd as well as a corporate crowd, and so there's more demand there. But we are still feeling the waves of COVID to some degree, because even though we were outside of COVID last year, we saw people going away outside the UK far more. So as that equalizes, we do expect in key cities such as Birmingham, Manchester, Leeds, York, and of course London, for 2 beds to be more value for money, if you like, provide a better yield. But there may be some near-time fluctuations with that.
Okay, perfect. And look, a question that as a property investor myself, it's sort of it's become more relevant in recent years. I think the concept of Airbnb has been around for a while now, but I think it's become more accessible to act with short-term lets on your investment. The developers are allowing it more. The lease allows it a lot more than it used to. Mortgage lenders allow for it a lot more than they used to. So if you were giving advice to investors, I mean, is there anything specific from a legal regulation or regulatory point of view that people need to be aware of when looking to lease their properties on a short-term basis?
I think you've covered most of them there, Johnny. It's it is becoming more accessible, short-term rentals. We still do come across, I speak here as a reformed lawyer, legal documents take a hell of a long time to change in most cases. Some have taken a very progressive approach, and we are, in fact, the sole approved operator in certain developments where the developer has decided to take a proactive and entrepreneurial approach and permit short-term rentals within the head lease. In a lot of cases, that's not the case, but because of the way that we operate with dedicated site managers in developments that we take on, freeholders generally tend not to have an issue with us operating there because we don't cause any nuisance. Our incident rates are absolutely tiny because each of our guests are checked in person on each occasion, and the government issued ID checked, as well as the credit card with which they booked, which means that bad actors are completely weeded out.
Got it. Okay, that's great and comforting to know for investors, which I think, for a lot of seasoned investors perhaps haven't dipped into the short-term world yet. And so these kind of comforts, I think, from your knowledge and experience are really useful. And again, speaking of that, for overseas, as you know, most of our clients are overseas, Middle East, Far East, Africa, all over the world, really. If you could just elaborate a little bit on the procedure for our overseas investors investing in and using you for their short-term let service. What does that look like, and how do you hold their hand when they're 3,000 miles away from the property itself?
Absolutely. One of the key pillars of our business is that it's got to be a hands-off service for our client. Now, obviously, that emanates from me as the first client, wanting to make sure, as I was as being a lawyer at that point, before I'd left the law, I needed to make sure that the solution that I was providing for myself was in fact hands off. And now a lot of our clients share a similar profile to you guys, in that many of our clients are in fact not resident in the UK. So our service extends from picking up keys on behalf of clients. We're not professional snaggers, so we won't do that, but we will take a video of the property and send it to the client. We'll then oversee the furniture. We'll then get the listing ready, and all aspects of short-term rentals we will take care of. There are two differences to our service when compared with a long-term rental service, and that is that the homeowners are responsible for paying the utilities, business rates, TV license, and Wi-Fi. And then the other part is in terms of the payments. We pay 1 month in arrears because we have to collect the cash from different platforms that we operate on. So there's a slight payment delay there. Clients do get access to an online portal which gives them live current information, so they can keep track of what's going on in their property through that portal. However, the statements and the payments are not made until the following month. The portal is correct up to 95%, but bank charges are not taken into account, so we still have to do the reconciliation the following month.
Yeah, that's really useful. I think the online portal, particularly with different time zones, and people in the Far East, as an example, 8 hours ahead of the UK, and not being able to perhaps pick up the phone at the right times, just being able to log on and see where how your investment's looking, I think is a massive bonus. Lastly, look, to kind of put you on the spot a bit, I mean, it's always good to talk about success stories and a case study, perhaps of something that really sort of calls out for you to tell us about a particular property owner of yours or client of yours. Is there anything that springs to mind on that?
All of our clients, vast majority, certainly, Johnny, are very happy, given our the churn rates are extremely low in the business. And it's unusual for short-term rentals not to significantly outperform long-term rentals. Typically, that figure is 50 to 100%.
Right.
So when you're taking away all costs on both models, typically we're outperforming by 50 to 100%, which in many cases is actually saving the property for owners at the moment, myself included, with interest payments the way that they've gone at the moment. It's a difficult market, and it's helped save properties. Now, we have one client in central Manchester who bought a unit on Tibb Street in central Manchester, new build, and it was in the region of 240,000 for a 2-bed. That was several years ago because it was off plan, and then it was actually acquired about 2 years ago. And in that time, we've been generating circa 25,000 net of our fees and booking platform costs and the utilities and electricity costs. So that individual client's been making on a central Manchester. I mean, it's central, pretty much as central as you can get, over 10% on their purchase price.
Wow.
And the capital value increase. Well, Johnny, there aren't too many properties that have actually sold in that development since then, but you'll probably have a good idea and be able to steer your clients on how much that property has increased in capital value.
Yeah, it'll be a huge amount based on today's market and what's happened over the last few years. But I think you touched on it there. I mean, we all, as I say, as an investor myself, we've all felt the pains of the interest rate at the moment going, I think mine went up from 2.9% as an overseas buyer up to over late 6s, early 7s at one point. So, having that extra increase from yield from a monthly perspective is hugely beneficial, particularly at the moment, but obviously going forward as well. So look, it's a great option, and I couldn't recommend you guys more highly from your experience. I don't think there's anybody better in the game at what you do. So thank you so much for coming on, and I'm sure there'll be plenty of clients that want to speak to you guys and understand a little bit more. And obviously we're talking with relevance to Manchester now. As you say, you're in 39 different locations. We're in various locations with our developments as well. So anybody that has questions for either of us, obviously just ask. And thank you again for your time, Raj.
Johnny, thank you for having me. Nice to chat.
Nice to chat. Thank you.